how to shop for a reverse mortgage. This can be quite confusing. This is not like shopping for other mortgages. So let's go over some really important things that you want to ask and look for first. Now, sometimes we get clients who get multiple quotes and they're super confused and all turn it around. I'm going to explain to you why that is and how that cannot be you. And first and foremost, you need to make sure you're working with a caring, trusted expert, a professional who does reverse mortgages. I personally wish this type of mortgage required a higher level of licensing because it's so different than any other mortgage. And a lot of the time, we're dealing with the largest asset in retirement. And so I think a very high level of expertise is needed to do this. So I'm going to advocate right here and say that I believe only CRMPs should be doing reverse mortgages. If you haven't achieved that licensing yet, get it. If you're a loan officer watching this, if you are a consumer, work with a CRMP. That is what I am. It is a certified reverse mortgage professional. This test is not easy. You have to complete at least 50 reverse mortgages, and the pass rate for that test is 25%. I have a finance degree. I found that test difficult, hard, like my college exams were. So first and foremost, work with somebody who knows what they're doing. Unfortunately, regular loan officers a lot of the time have access to do reverse mortgages. So you may call somebody that you've done a mortgage with in the past and say, hey, can you do a reverse? And you want to vet them. If you already like, know, and trust them, I understand. Most people do want to work with that person. Some of those people may be able to find a mentor or a coach like myself to work with and work through the file together to make sure that you're protected. If not, you got to love them, but you might have to leave them. I liken it to my uncle needed heart surgery. And as much as I wanted to make sure that he had the perfect, best heart surgery, I'm not a heart surgeon. So I didn't say, hey, let me do it for you. This is that important. This is the rest of most people's financial lives, and it can make or break the entire legacy and your retirement. So there's 3 things I'm looking for as an expert. I want to protect what you need and meet your goals now. Meet your goals, protect what you need all the way through retirement, and at the end. The sad truth is that certain people who have a reverse mortgage will not be able to remain in their home for the rest of their lives, even though they want to. Many people will, and it's a great fit. Some people don't even want that. Some people just do a reverse until they move and sell, and that's great too. But for the people who do want to stay in their homes and they say, oh, I don't care about the equity, I still care. Any caring expert and advisor in this position still cares, because if you happen to be that person that falls into the can't stay in your home because you need a higher level of care, typically you're going to be looking, or your family is going to be looking, to sell the home to get the remaining equity out to pay for where you're going. So it's really important you're working with somebody who's also looking for that long-term view. Most loan officers who are not well-versed in reverse, they are not going to be able to have all those things in their mind because it's just such a shift in mentality. You want somebody who's done a lot of these. Typically ask if they've done more than 50. CRMP is a very good way to tell, okay, we have to have done more than 50 to have that designation. If you want to work with somebody who doesn't have this designation, there's a few things you want to ask. I'm going to get into exactly how to shop the quotes as well, but it's more important that you're working with somebody who knows what they're doing than any quote. And personally, I would rather pay for a higher level expert. It's like the person who does my taxes. They're not the cheapest, but they know how to do exactly what I need, and they're the expert on my side. So even if that is at a little premium, I would say it's worth it. It's not always. A lot of CRMPs price better than other loan officers because they know how to do it anyways, like me. Okay, first off, you want to ask them, have they read these 2 books? I'm not the author. I love and respect the author. I mean, love's a little strong, but I really respect the author, because these 2 books, first, Understanding Reverse. This is a book by Dan Hultquist. If you're a consumer and looking at a reverse mortgage, this is a good book to read. This one also, if you're getting a reverse mortgage and have a reverse mortgage, this one's really good to help you understand what you have and how to navigate it. Very helpful for heirs too. In my opinion, if a loan officer hasn't read these 2 books, they're not well enough advised to do this loan for you. So move on. Say, I appreciate you. I might like you as a person. I need to find somebody who really knows this product. In this one, Dan actually says a few really important questions. So here's some questions that I want you to ask your loan officer. And if they can't answer or if they fumble, move on. Simple as that. Number 1, how does the line of credit grow? Number 2, how does the rate change? Number 3, how low can, well, this is actually not in here. I want to go off of the extra rate change part. How low can the rate go? How high can the rate go? What causes the loan to become due? How does the non-recourse feature protect the borrower? Should the borrower make voluntary payments? What should I do if I can't pay my property taxes? And what should be done if the home is damaged? This book answers all of those questions if you want to know those answers for yourself. But I will tell you, if you read these 2 books and then interview a loan officer that says they can do reverse, but they're not specialists or they're not a CRMP, you will probably know more than they do. So first and foremost, your loan officer should have read these 2 books. They should have taken extra training. Hopefully they've done a lot of reverse mortgages. This is not, I like to do business with people that are in my community, in my sphere. Maybe it's my friend's brother. Personally, I like to do business that way. But when it comes to something like a reverse mortgage, where it is such a large asset, this is a huge financial decision, you want someone who's going to explain everything clearly and be able to answer every question. One of the things I get is people saying, oh, reverse mortgages are scams. They're not, but unfortunately, a lot of reverse mortgages can be done by people who don't specialize in them. So when they talk about them, they sound scammy because they're nervous. They don't understand the product well enough. They don't have the confidence. They can't communicate about it because they're not in it. All I do all day, every day is reverse mortgages. If you'd like to work with me and my team, in the comments below or in my bio, there's a way to do that. If you're a loan officer and you're hearing this and you're going, oh, I probably need some help, I probably need some coaching, that is in the show notes and the link as well. Please like and subscribe this video. That helps me create more free content explaining this stuff. Let's assume you found your loan officer you really want to work with. Let's get into looking at and shopping reverse mortgage quotes. Maybe you found 2 different loan officers that you want to work with. I would say look for somebody that you like, trust, and can answer all the questions, and then stick with them. Loyalty is important, but if you're gonna shop, here's the important things that you need to know. This is not typically a product that you should be shopping a ton for, but some people do want to shop. And if you're getting nervous or you're getting quotes that you're like, I just wanted to get a second opinion, do that. Now, interest rates dictate the amount of cash you can get or the loan amount you can get. And interest rates change regularly. So you want to be strategic. You want to set one day on your calendar and ask for quotes from all the people that you're wanting quotes from on that same day. This is the only way you can compare apples to apples. A lot of the time I'll get somebody that said, hey, I got this quote, can you review it? Whether it's a loan officer or a consumer. And it's like from 3 weeks ago and rates have changed. And so when I try to compare, it's not comparable because rates change. And so that's the first thing. Get all of your quotes on the same day or within a day of each other so that you have the same information. Second, you want to make sure they're all using the exact same birth date and the same close date. There's some tricks of the trade to make the numbers look better if you know what you're doing. And I know that because I know how to do that in my software. And so others do as well. You want to make sure so you can compare apples to apples. They have the same birthdays for all borrowers and or non-borrowing spouses included. And let me say this too. This is not a time to say, oh no, I'm private. When somebody tells me, oh, I don't want to tell you my real birthday, I say, great, call me when you do. A real loan officer who really does this is not going to put up with you being secretive. If you really want to look at your numbers, you need to be able to say these things. And hopefully you're working with somebody who's not going to spam you and call you. In my opinion, that's a silly thing to do. If you want to work with me, you're going to be calling me. Anyways, make sure the home value they're using is the exact same. loan officers often will ask you and then look at an AVM, automated valuation system, and then they'll use whatever number they feel is appropriate and accurate for your loan. But what happens, and I've seen this myself, I had a client send my quote to someone else, and that someone else jacked up the appraised value, the estimate that we use, and to an unrealistic amount. And so then I had to convince my client, it was like the house was going to be worth like 2 million. The other loan officer put 2.4 million. And of course the numbers looked way better, right? You can get more equity out of a home that's worth more. But nothing supported that value. And sure enough, he moved forward with me, and when the appraisal came in, it came in at right at 2 million. So it's important that you're not getting swayed by these tricks of the trade and any trickster loan officers for that matter. I saw a horrible quote a while back where the appraised value was almost double what the realistic value was. And I called the loan officer and I chastised him. I said, don't you dare do this. This is horrible. You just cost the borrower some, because there's some costs, right? You've got a credit report, you've got counseling, you've got the appraisal fee, and that loan didn't go anywhere. So this is, again, why you want to work with somebody who's reputable. CRMPs, we want to protect our reputation. Reverse is an amazing product, and it's changed a lot to become this amazing product in the last 10 years. So it's really important we protect our reputation. Don't work with somebody who's not invested in that. Okay, so we've got quotes on the same day. We've got same home value, same birth date, same close date, same margin. Same margin. You want to say, I want you to use a margin of whatever margin you're looking at. Right now, this changes. So right now, if you're watching this video like in real time when this is posted, I'm recording it in August of 2024. A really good margin is anywhere between 2 and 2.5. If you're seeing a margin of 3, probably go somewhere else. And it's my personal opinion that if a loan officer is quoting you a 3% margin, at least in today's market, right, this changes. But if the margin is way higher than what normal competitive rates are, that should lose them the business anyways. That's not good. It affects your loan amount. It affects your loan amount. So those are the variables that you need to look for. Then once you have those quotes, all you're comparing is the origination fee, other costs, which keep in mind these are estimates. So the other costs will adjust a little bit no matter who's doing this loan. We always go in with estimates. Sometimes if title or escrow or one of the third parties costs different fees, it changes those estimates. Hopefully we're pretty accurate. Mine are typically pretty accurate, but they do change sometimes. So keep in mind that is an estimate. And keep in mind that your appraisal will dictate the actual home value. So if you have somebody telling you, oh, your home's worth $700,000 and somebody else saying, I really don't think so, I think it's $660, know that neither of those opinions actually matter. When it comes down to it, the appraisal report is going to dictate what your numbers are based on. So that appraisal report comes in at $660, that loan officer that was quoting you $700 has to backtrack and go, oh, I'm so sorry, your cash amount is lower. Or if you're in a very tight numbers situation, maybe we can't do your loan now. So you don't want to be swayed that way. You want to make sure that they're realistic in what they're estimating their home value to be, and advocate for yourself. Look up online. You can literally type in your own address online and go to various third-party sites that will estimate your home value. So have an idea of what your home value is going into this conversation. You're going to need to make sure they have the exact same mortgage amount too. So if you have a mortgage that you're paying off, some of you don't, some of you do, make sure that you're using the same mortgage amount. And personally, I don't think anybody should be running your credit at this point in time. So if they're asking for your Social Security right up front, I would say no thank you, just give me a quote before I decide. Yeah, you shouldn't be having your credit run, in my opinion, this early on, before you've chosen a lender, before you've chosen if you want to do this loan, before you're fully educated about all of your options. So that's my tips and tricks and know-how on how to compare reverse mortgage quotes. You're not looking for the end dollar amount, because a heck'em is a heck'em is a heck'em. No matter who does them, the formulas all work the same. Mortgage insurance is 2% across the board of the home's value. So don't compare that number. That number will change, and it will change when your appraisal comes in. That's not a variable to compare on. What is a variable to compare on is the origination fee, the margin, and the closing costs. Those are the three variables that you can compare to see what is the best deal that I'm being offered. I think that's all I had to say today. If you've gotten value from this, please like, subscribe, comment. Let me know any questions you want to have answered. I'm making more content. I appreciate you guys sending my videos to your friends and family, saying like, subscribe. That helps me create more content to answer more questions and get more info out there. That's what I'm hearing. The feedback is thank you for being real with the actual information. Some of the videos out there are a little cryptic. I just go straight for it. Thank you so much. Have a good day.